Good Wednesday evening, option traders. This is Sam the Trading Geek with your Wednesday, March 12th, 2025 option review video. Hope you had a great trading day and great trading day week, or to date, I should say. We're looking at the major markets for today, which finally gave us a day that wasn't fully faded into the close. So Mag 7 outperforming today, up 2.3%. Microcaps up 1.36%, Qs up 1%, SPY mere 0.5%, total market index 0.49, VIX was not down 100%, VIX was down about 10% today. But you can see the mid caps, the Dow, Bitcoin, aggregate bonds, and the TLT were all down on the day. High yield bonds just up 11 basis points, and then the small caps up 17 basis points. So not a great showing by the bulls, but every rally starts with a little push, and this is better than the opposite result, as they say. Major markets for the week, you could see here that only gold is positive on the week so far, and the rest of them are in the red with aggregate bonds just slightly down, and Bitcoin being the worst. I'm not sure what's going on with the VIX here. And then if we see year to date, we've got gold and the TLT up more than 1%, aggregate bonds and high yield bonds, but everything else down on the year so far. And the SPY just about under 5%, the Q's up down 6.7%. So a little improvement today, but in essence, we still got a lot of work to do. If we look at the sectors today, kind of a mixed bag, basically 5 up, 5 down, and essentially the utilities unchanged, but you have more than the S&P sectors here because I include a few other ones like retail and real estate here, which are not officially sectors of the S&P. And if we take a look at the sectors on the week, only energy is up 0.4%. Everything else is in the red. Year to date, healthcare and energy are up slightly more than 1%. And then XLRE, all the defensive sectors you could see are up on the year, with materials up 0.94% and communications flat on the back of the only Mag 7 that's up year to date, which is Meta. All the rest are in the red. Industry-wise today, semiconductors bouncing back pretty well, and hot stocks caught a bit at 1.8%. Blockchain stocks up 1.75%, even though Bitcoin wasn't up that much. FDN, internet stocks, and biotech up there, but solar builders and China tech stocks were all in the red today. On the week, we only have exploration production, oil exploration production up, along with gold miners. And then on a quarterly basis, gold miners just stellar performer year to date, along with Chinese tech and defense sector companies. And then cyber stocks. These are the cyber security stocks up 1.17, everything else in the red with, oh, look, once again, the pot stocks are leading the way to the downside. And look at software stocks. They were first last year, and now they are last. Blockchain stocks, and so far this year, semiconductors are down 9%. But like I said, the journey of a nice rally starts with a little push, and we'll see what the rest of the week brings us. Take a look here real quick at the SPX chart. You're looking first at the daily, and then at the weekly and the monthly chart. And I like to show these to put these in perspective. And I look at these every single day at the start of the day and at the end of the day to remind myself and keep a zoomed out perspective. So if you start with the monthly chart, you can see that We are in a pullback out of an uptrend. For the first time, it looks like we could have a MACD cross of the fast line over the signal line, but that can't happen until the month closes. So still lots of time in March and until the end of the quarter. But no doubt about it, this one candle has given back everything for the last 6 months. But if you put things in perspective, where we are today, we're just back to where we were in August of last year, or more so closer to July. Let's say July was 55.22 at close. Between July and August, that's where we were. So we've given back about 6 months worth. No fun at all, but hey, when things are going up constantly, they gotta come back in, and things that go parabolic, and I'm not saying this is parabolic, but they don't correct with a whimper, as they say. Looking at the weekly, you can see the MACD is solidly negative, not yet through the zero line, but we are at the 50-week moving average. Not looking good. 4 weeks, we need to see an up week to kind of reverse this trend, but we are one time framing lower on the weekly, and that doesn't bode well from a bullish standpoint. But it all starts with a daily here, and if we're going to make a stand at yesterday's low, which is 55.28.41, then we'll see if we can mount a rally. We certainly have enough oversold factors that we should be able to, but look at that MACD solidly under the zero line, solidly down. And if we look at the RSI, we can see we are at the oversold 30 mark, so we should be bouncing and bouncing hard, but so far has proved elusive. If you look at this red line and this green line, that's the expected move, the options implied expected move. And as you can tell, we gapped down on Monday, and we have been outside of the expected move, lower edge of the expected move, all week long, which is 3 days, essentially 3 trading days. To get anything back here, we need to hurdle this 56.51 and continue upward. And this is the upper edge of the move. You can see here yesterday we closed below the Bollinger Band and we're right back inside of it. So you can see every time we attempted to sell out, stay outside the Bollinger Band, we snap right back into the Bollinger Band. And another thing to note, what has happened is we've gotten red candle, green candle, red candle, red candle, and then this shows as a red candle, but we did close positive, but certainly below the open on the CPI euphoria. Take a look at the NASDAQ, same thing. I won't spend that much time on it, but you can see here, same kind of story. MACD is rolling over on the monthly. Under the 8 EMA, what we need it to do is to start finding support here. And you can see it here. I have the options implied expected move shown on here. The weekly down one time framing lower. So every low is below the prior low on the weekly. MACD negative, totally negative MACD. And you can see this downtrend. So the bears deserve the benefit of the doubt at this point when you're on a daily or weekly time frame, but for sure on the monthly time frame, the bulls still deserve the benefit of the doubt. And then one last one, the small caps. I mean, what do we say about these? They've been decimated. They have shown zero strength. You can see that 1 month out of the last 4 has been positive, and here we are all the way back at the options applied expected move here, and MACD is already looking like it's crossing over. We just need the completion of the month, but this is worse than the NASDAQ and the S&P. Here we are at the 2026 level, and no signs of support yet, but we shall see. It all starts here on the daily chart. This came down hot Friday, kind of held at the options supply expected move yesterday, the low of it. And then held up okay today. So we need to see better balances than we have so far. And hopefully we'll get some follow through after PPI tomorrow, the producer price index. If we take a look at, let me set these down. You can see here that we started the week with an options implied expected move into Friday of about 153 points. And we still have into Friday 87 and a half of those points. And I believe that with the volatility we have with the VIX at 24, we will see all of this 87 points and then some. Even for tomorrow, when we get PPI, we have a 59-point range, plus or minus. So again, I think we'll see that and more given the level of volatility. The VIX, if we take a look at it, let me put it up here, see how it looks on my tripod chart. So here's the monthly, trying to get something going here. On the weekly, it looks like we had a failed attempt to break out of our range here. And then on the daily, we have 2 down days. We closed inside the Bollinger Band. We did generate a VIX buy signal. It was confirmed today, and now we need follow through. This is the fifth one we've had, but not all of them had follow through. This one is finally the one with 2 red days on the VIX. So we'll see if this amounts to anything, given all the oversold indications. If we take a look at the VIX options and look at the ones that expire next week, I guess it is. So we closed at 24.23. Let's call it 24. The out of the money calls, $1 out, are trading for, let's say, 99 cents. You go $1 out to the 23s. They're trading for about $1.34. So not much that can be gleaned from at least the near dated VIX options. So let's take a look at the next month expiration, which is on April 16th. If we go out to the 25s, these are trading for about 205. And we go out to the 23s. These are trading for 375. So puts are pricing more than calls, not by much. And that tells us that there's more decline expected in the VIX because the puts are more bid than the calls, but that's just one data point. So let's go from here and take a look at our open trades. We've closed quite a few of them. And let me bring up the option trade list. I swear I position these, and as soon as I get them up, they move around. See if I can get that. There we go. So we have ADI. Switch this to the chart. Choose the right symbol. There we go. All right. So ADI, not really showing any strength. So we rolled this out to the 210s in June, I believe it is. And it continued even with semi-strength. ADI just came down to our 206 level. It's just not showing much strength, which is kind of disappointing. It's a negative MACD. And we're already down about 76% on these particular puts. So I'll have to decide what to do with this one if it closes below our stop, which is set at 205. That's not a good thing. And ADI should be showing more strength than that. APA finally recovering from this sell-off post earnings and coming back up. I almost put out a trade to add to this position. It's the 20 puts. We're down 227%, but energy names are showing some relative strength, and I do like Apache in the energy space. So if you wanted to add to this, I'm not opposed. It is in the money, and if we can't show much strength, maybe I'll roll these out and give us more time and room to be right. CrowdStrike showing a nice couple of days rally here, up 5% today. So they came after this one. Where is my CRWD? Did we close this one? I'll have to check. Let's see. Yeah, I guess this one is closed, so I shouldn't be talking about it. I thought this one was still open, but let me see if yeah, we closed down here um, below um, our stop, which was at 334.90. So yeah, it's unfortunate, but we got down to 303 on here, so we had to close this one. So my fault there. It should have had this off the list. Sorry about that. But you can see that it's bouncing. It's unfortunate, but that's the way it goes. We got all the way down to 300 and we're already up $46 from the lows. Sometimes happens. All right, so back to the open trades. Costco. Take a look at that one. All right, Costco is still open. Where is my Costco trade? So that one's here. And why don't I have Costco on the list here? Okay, there's Costco. Going sideways here, we're down about 45% on this put spread. 900, 875. We're $25 away from the low end of this. So still in okay shape. We have until March 21st. If we need to, we'll roll this out. But here we are, four down days in a row, not showing much strength after earnings, but that's typical in an environment like this. And I think that if this market starts to show some strength, then Costco will also do. But the MACD is on the daily is definitely negative, and we are at an RSI of 30, which typically indicates an area of being oversold, and we should see a bounce soon. All right, so CVX, we're down about 85% on this put spread. We're going sideways. There's a lot of time on this, and with energy strength, I'm surprised this hasn't lifted up more, but I guess on Monday it showed some pretty good strength and just gave it all back, and we're back at Friday, below Friday's low. But this is a 150, 130. We're still above the short strike, which is always a good thing, and certainly above our stop. So we'll just give this time to work if the energy names are going to continue to exhibit strength. FXI, look at that sideways action. We've been here, I guess, since February 21st, maybe even the 20th. We have a short put in April, and we're up 59%. Nothing to do, but again, I keep threatening to find a call spread to add to this, but it really isn't showing the strength I would like to before I commit some long premium to it. GDX holding up very, very well, although we're not getting closer to our next target, or we are getting closer, but still a ways from our 375 target. This is a June spread, and if we can get over this chandelier stop, this dotted line, we should definitely head to the 42, 43 level. So as long as gold shows strength, this GDX is one of my themes for 2025 to hold up very well. Halliburton, another one where an energy name, we sold a put to finance a call. We're down about 90% on it. Sounds worse than it really is, but we bought this for about 30 cents, and it'll cost us about 45 cents, or what's the price here? We paid 30, and I guess it's going to cost us 57 cents since we're down 27 cents on this. So still early. It's a May spread, and if energy names are going to show strength, Halliburton will. Still very early on this play. After hours, Intel had good news, and they have a new CEO. And last I looked, the stock was up at least 10 to 12%. So let's see on an intraday chart. Yeah, you can see here finally showing some strength. So it was up to 23.50, closed after hours at 22.85. Hopefully the strength doesn't get faded in the morning as typical with Intel, but I guess by the time you see this or watch this in the morning, we will already know. But we are down on this play. We have a really an out of the money call spread, which for all intents and purposes needs to be rolled and put into another play. But I haven't been wanting to spend any money on premium until we saw some more strength. But yeah, the big part is we have the short put in June, which is the short 20 put that pays for this spread. So let's see if we can't get anything out of this tomorrow on this CEO news. Lyft going sideways. We have a short put here. We sold it for 47 cents. It's at about 97 cents, but it's a $10 put. At the low yesterday, we hit $11.12. So we're not too far off. And Lyft has a long time to go to June. This is a small speculative put play. Merck going sideways, considered closing this one as well, but still holding up. It didn't gap down like J&J did. We closed the J&J trade today, but not showing the same kind of strength that Johnson & Johnson was, but still holding up pretty well. And even though it lost $1.38, we bought this for $1.34, and it's still worth about $5.59. We're looking about $8 on the next trade, but once it shows some decent strength, we'll probably just take profits ahead of the $8.25. So Merck in the healthcare sector is still looking good. NVIDIA with a gap up and holding most of the gains today, which was very nice and impressive, spurring the SMH onto some gains today, although that faded a little bit, but NVIDIA did not. And so we took profits on our combo. We took $6.48. We paid $4.75 for the spread. So hopefully we can get to the next level, $6.10 on this combo. It's nice to be able to take some profits. And had this been a stronger day, I'm pretty sure that NVIDIA would have been up a lot more than $7. The covered call we rolled yesterday, and I went through yesterday and verified the calculation here to see that the profit and loss on this particular play, even though we bought the shares at 147, all the premium that we have committed and closed successfully means that this play is only down about 6% because we keep rolling since December. So we do have a short call at the 140 strike. I considered maybe bringing down the strike to 135 or 130, but I want to see us see NVIDIA exhibit some strength. And so with the stock at $115, we just need it to rally about $7 for us to be back to even on here. And NVIDIA can do that in a day, if not half a day. PLTR showing some good relative strength today, holding up very well, up 7%. It was added to the S&P, not sure whether that's the 100 or the S&P 500. I believe it's the S&P 100. So showing strength, we're still down 46% on this 80-65 put spread. But the good news is we're back above the short strike, and with a short time to expiration, this one is looking good. Our QQQ inflection point spread shows us to be down 3,900%, and that's primarily a result of the short put that's part of this structure that goes all the way to June. And with the volatility elevated, that one is pumped with volatility. And as soon as we get a little bit of volatility deflation, this should come in very nicely. But the fact of the matter is we have a 500, 510 call spread on March 28th, and that is about $24 out of the money. So if we take a look at the April 28th strikes, the 500 still have a bit of juice in them, $2 and $2.50, and then the 510s have $95. Again, I considered rolling these up and out in time, but I want to see more strength. And if we see more strength, we should be able to get more money out of these that we sold. If we take a look at the options implied expected move, which we still have 16 days to go on these options, you'll see that $24 gets us right to the 500 mark, which isn't enough really, but if volatility holds up and QQQ's rally or the NASDAQ rallies, then this could end up being a profitable spread. And I imagine if the Qs move up 10, 15 bucks from here, we can close some of these for a profit, since the value of the short put that we sold will collapse. Moving on to the SPY, we have a similar situation here. You can see we have the, this one expires next week though, March 21st, 590, 600 call. And let me close this up. These are not faring as well. And with some strength, we probably should end up salvaging these and moving to a couple of different strikes. So the 5.9s are worth 54 cents. The 600s are worth 12, 13 cents. So we're probably dead in the water on the calls spread, but the short put could be kept on to see what that does, since it's so far out of the money, where it goes out to June, all the way out to the 505s, which is about $53 out of the money. So we could end up profiting from that. Although the idea when we sold this for a 19-cent credit to make money on the spread so far. Market's gone further down than we expected. TLT, we still have two trades on this one. Let me go back to the chart. You can see that we are now inside the short strike, and we've had really 7 days of weakness in the TLT, which is not good, but our spread is still worth $4.16. We paid $1.74 for it. If we don't get a pickup in strength, then I'm going to close this perhaps tomorrow or Friday and call this trade a success. We've harvested, 6, 7 profit targets, and we don't want to hang around if this thing is going to come back and round trip back to say the 87 or $86 level. And then we also have the short put, which is an 86 put in April. We're up 51 or 52% almost on this. So put sales have worked out of the money, put sales in TLT, especially since volatility was elevated. And then finally, we have Walmart really not showing any strength, which is kind of surprising. This has kind of been a straight shot down, 20 bucks since the 105 level. So bearish chandelier, bearish parabolic stop and reverse. And so our particular put spread, which is an 80-75 put 90-75 put spread, sorry, we're down about 740%. If we see some strength in Walmart, then I'll look to roll this out and down in time. I think Walmart will come back, but it had kind of gotten ridiculous up here, and so pulling back about 20% is more than I expected, but not totally unexpected given the run Walmart has had and given the market that we've had. Well, that's it for the trades that we have. And one housekeeping note here. As many of you know, I'm a CPA and I do prepare tax returns for traders and for a lot of other clients. And so I do about 6 dozen 1040s. So starting next week, there will not be a Wednesday night video through April 15th. And then come April, the first 2 weeks of April, there won't be a weekend video from me. Andy will continue to do videos, and I'll check with him to see if he can do a midweek video during the next few weeks to take my place. I simply won't have the time to put out videos. I will be in the room. I will be monitoring and putting out trades, but no midweek video until after April 15th. And then no videos at all for the first 2 weeks of April, given the tax busy season. Just can't do it, guys. And but I will be with you every day through April 15th. If you have any questions, Trading Geek Sam in the trading room or at Trader Geek on Twitter. Have a good night. Thanks for watching, and I welcome any of your feedback. Take care. Bye-bye.